Hello traders, Ala Peters with alphawavetrader.com. It is beautiful January 26, 4:30 PS EST. In this webinar, will share with you what Alpha Wave Trader method all about, as well as I will share with you and answer your crucial questions about the instrument of your choice. But first, remember and recognize the risks involved in trading, and please spend time understanding US government required disclaimers. So, what makes Alpha Wave Trader method so different? I highly encourage you to visit the website and to look at Key Points webpage, as well as my story, to recognize I come from trading background very similar to yours. Until 2008, I was trading long-term stocks, options, and Forex. I was in my positions always and forever. In 2008, I was in very sound, fundamentally companies, oil stocks, coal stocks, as well as potash stock. In 2008, all the companies collapsed completely. But because I've never been hurt in trading, it did not faze me. I stayed in my stocks despite markets crashing. And that's when I recognized there is a very good reasons why companies are crashing despite being fundamentally sound. There is a very good reason that everything preset in price far in advance. I removed all the indicators. I removed everything that was clogging up my vision, and I started studying the price. And I recognized that price keeps repeating its same dance time and time again. And it doesn't matter if it's 1 minute S&P Emini, if it's Forex weekly, if it's Amazon monthly. If you remove the symbols, you will see time and time again, as I had shown this afternoon in education class, that everything preset in price far in advance. Here's an example of S&P. And this is exactly where I expect S&P to collapse again. Take a look. Price spelled out all of these levels long time ago, more than 10 days ago, and S&P continue playing out from these levels. If you were in live trading room this morning, you would see where I said, we ain't shorting no S&P into this level. This is where you look to buy. And that's exactly where buyers stepped in last time on S&P. I will also give you detailed description next where S&P is currently and why it was extremely choppy area. This is what we discussed a couple of hours ago in education course. But I would like for you to take a look what happened on S&P here on Friday, and where my market finally reversed on Friday afternoon. Because guess what? This is S&P hourly. But this is S&P monthly. All the levels spelled out, as we constantly emphasize and show to our new students, where the rally started from in 2009. 800 number. That rally spelled out where reversal levels will be. Those who do not understand the difference between correction and the last buying opportunity in October had a bit of a heartache the last few months. Those who know what price is telling you know extremely well. There is a world of difference between what we're seeing on S&P monthly versus what we saw on Friday on S&P hourly, where market had collapsed. It is exact same formula. It is exact same rules that I'm using on monthly versus hourly chart. Formula remains the same. Doesn't matter if it's 1 minute, doesn't matter if it's hourly, doesn't matter if it's monthly chart. That's precisely the reason why I find trading spiritual experience, because I'm showing all of the levels far in advance. I'm showing that everything preset in price far in advance, confirming life is just a stage, confirming that the same symmetry you see in flowers, you see in price. All you have to do is play by the rules. And that remains the key. So that's the only thing I do when I demonstrate the method in our day trading room. I enter markets using crucial rules I developed and exit markets using Fibonacci levels in our basic education course, teaching method that applies to any instrument and any time frame. No indicator on the planet will ever tell you how the markets will behave in the future. Price tells you everything you need to know far in advance. Since we started on S&P, let's wrap up different charts on S&P. This is where a bullish rally had started on S&P last time around. And this is a bullish rally that's confirming that S&P heading to drastically higher levels all the way back up to 2060 and higher up. It's up to you what you trade, what instrument and what time frame. But this is again the importance of respecting reversal zone and the importance of rule-based trading will forever and ever remain the key to alpha wave trader method. So again, pay attention to what happened when S&P came first time to reversal zone. Push to the upside for 60 points. Here we go. Here's reversal zone 2. Push to the upside currently for 70 points. And this will remain a major obstacle to the upside, 2061. Can S&P finally blast through this level? Or will the seller step in again? That remains the key. So, when I worked with multiple software and programmer developers, I recognized every single indicator and software that's for sale is delayed. That's the biggest problem with indicators. Typically, this is how indicators and software are developed. Certain mathematical formula is applied to certain sequence, and then something flashing on your chart or something showing the crossover. The only problem is, by the time you enter the position, it's too late. Here's an example of moving averages crossovers, the indicator I used forever and ever and ever and ever. I couldn't understand why sometimes moving averages work, but others don't, until I studied the price and recognized markets in consolidation and correction structure are 30 to 40% of the time. The other 40% of the time, markets are ranging. Therefore, 80% of the time, it is way too late to use moving averages crossovers. Only 20% of the time you can use moving average when markets are trending. Again, only 20% of the time, never more. That's the case unless you trade oil and DAX or pound yen, perhaps. When I work with private mentees, I log in into your computer. Currently, I work with Forex and stock traders, and I see what you traded prior to coming to Alpha Wave Trader course. And here's an example of one of the charts of one of my mentoring students. Jim was a trader for over 20 years and invested in indicators. I counted 9 indicators and I gave up as I could not find price, as price was completely cluttered. Therefore, blocking understanding of the price, not giving you any clarity. And again, investment is not into yourself, not into your knowledge, and not into understanding market structure. So, price is nowhere to be found. Price is completely cluttered. If you were paying attention to gold in 2011, you would know and respect completely why we've been witnessing rally on gold, posted on my blog since 2014 November, because gold came to reversal levels on our monthly charts. The formations you are seeing only every 5 to 8 years been playing out on gold already. Currently gold at crucial levels. Again, this is gold monthly. As I spelled out in gold videos, multiple videos and multiple blog posts, this is very, very crucial level. Pullback is completely expected, but levels untouched on gold since 2011. In 2011, gold spelled out where bearish trend exhaustion levels will be. Since 2011, gold spelled out where resistance level to the upside on gold will be. Everything based on key 4 rules I developed. Everything spelled out by the price far in advance. And if you browse my blog, you will find all the posts identifying these levels years ago. Reminding you, everything preset in price far in advance. We only respect news due to volatility. And that's precisely the reason why we love oil news days. If you browse my blog, you can see multiple, pretty much every Wednesday, posts on gold, where gold reminds you price will always override the news, and that remains the key. So, and that is not blocking your vision. You would completely recognize why gold monthly is having such an incredible difficulty. It's because gold daily at reversal zone. Clear? So I highly encourage you go back to the month of November, where I spelled out where gold will find extremely difficult time. Currently, day 6, gold in bearish correction. And this will determine if this rally migrating into weekly and monthly chart or if gold is reversing. Again, as you learn in the course, in order for the bullish rally to continue, gold has to blast through 1400 level. That's when it's gonna get interesting. But this pullback on gold spelled out since 2011. Reversal zone on daily with very crucial Fibonacci level on monthly. And that's precisely the reason why we completely expected selling pressure at this level. All preset in price far in advance. All you have to do, play by the rules. And if you learn how to apply these rules to one instrument and one time frame, you can learn to apply these rules to any instrument and any time frame. In today's class, we did the key rules: 1 minute chart, daily chart, hourly chart, monthly and weekly chart, showing you that price remains the same. So here we go. That's in a nutshell the key to alpha wave trader method. So what is a Fibonacci? What is this mysterious and beautiful concept that confirms that nothing in this world is random? This is a concept that was discovered in 13th century by Leonardo Pisano, showing you that each number added creates very key golden ratio, that each subsequent number in Fibonacci sequence is not random. And that's precisely how I know where these key levels will be. S&P since 2009 spelled out this was last opportunity to buy S&P. S&P respects decision point 2 like no other instrument ever will. S&P in reversal zone, but no need to panic. It is not bearish reversal, it is only correction. When price comes to reversal zone, it will test your knowledge of the markets. Is it correction or is it reversal? It is only correction, no reversals yet on S&P. But you don't want to buy S&P in reversal zone. This was last opportunity in the month of October. Volatility will continue picking up this steam. But again, as I had shown you very clearly, a world of difference between what you saw S&P had done on hourly when it came to reversal zone and collapsed completely. Expect the same exact thing next on S&P versus what S&P had done on daily. All the levels spelled out far in advance. And if you know where these levels are, if you know the rules, you know what not to short into, you know where to monitor for reversal. In the month of January, we had short on S&P daily chart for 60 points. Using exact same rules I use in our day trading room, where you will receive the invitation to tomorrow morning. So monitor your inbox approximately 7 o'clock in the morning. Unless you already visited Alpha Wave Traders room prior, that would be the only reason you will not be able to access it, as we allow only limited access to those who's been to the room 3 times. You have always opportunity to subscribe. So here we go. That's the golden ratio, and that's the numbers I use in the method I developed, and that's all that matters to me. This is the number sequence that determines where trend will end. So I would like to highlight to you what has happened on S&P hourly. Everybody's clear, correct? Trend spelled out more than 10 days ago where S&P will collapse from on Friday. Are you ready to see why the buyers stepped in on S&P on Sunday? Exact same reason where gold monthly finding the buyers. Exact same reason where S&P daily had found the rally. On Sunday, S&P came to reversal zone. That's simple. Exact same level where S&P daily had found the buyers. Exact same formula, different time frames, different stops and different targets. But whatever rule I applied to 60 minute, I applied to daily. As price is identical, the dance keeps repeating itself time and time again, has exact same sequence. And here's Alpha Wave Trader method in a nutshell. This is what I teach in the course. This is what I was teaching this afternoon as brand new class just started. This is how trend moves. This is what I discovered after studying price One day the light bulb went off. Price is simple. If you get to sift through all the corrections, through all the fluff, this is it. This is how price moves. Major trend consists of 5 waves. We only trade the inception of the trend. We never trade corrective wave 2. We love 2 pieces, wave 3. The inception of wave 3 will forever remain the key in alpha wave trader method, as wave 3 is always present. Wave 5 is not. Again, we only buy wave 1 and wave 3. We never trade wave 2, counter trend, and wave 4, and we never buy at the end of wave 3. This is it, and these are the rules I teach in the course every day. And if you can master that, that's in a nutshell 50% of alpha wave trader method. And this is precisely where S&P gave you 60-point collapse to the downside. And this is precisely why I've been spelling out since 2012. Euro is heading to 1000. I will show you the screenshot that posted on the blog and social media. The short on Euro from 3800. My apology if there is anybody here from Europe, but we Americans are dancing on a table. As guess what? I'm projecting that 1000 is not the end. I'm projecting that at 1000 we'll see temporary push to the upside. Again, I don't know when Euro will reach 1000. I don't know if that would be next week or 6 months from now. But again, we're shocked by how powerful this collapse had been. And as I spelled out, forever and ever and ever, expect this level next if Euro is blasting through the end of the minor trend. So, we poor Americans will no longer be poor for many years to come. Pound is doing exact same thing. And if you knew alpha wave trader method, you had opportunity to short from 3800. Highly encourage you to browse my blog, social media, going back years. Here's a screenshot from Euro from our Fibonacci trading bootcamp before I left on vacation last year. As price spelled out, where to short from? And I've been saying, is it possible that Euro will reach 3400 a year later? Remember what we discussed earlier? The end of the minor trend? If you are trading Euro, you know that Euro danced at this level for months and a half. The same way that Euro struggled to break through this level for 6 weeks. The same way that Euro reminded you clearly, do not ever buy into reversal zone. You remember where S&P is now, correct? On monthly. But those who know my method know extremely clearly. This is very powerful reversals. S&P is giving us only corrections so far. And that's where Euro is currently. And that's where it's heading next. 1000. So buckle up. St. Bart's, here we come. We're joking with my students we'll have Alpha Wave Trader reunion in a couple of months on St. Bart's, but I assure you, potentially next New Year. It's gonna be dirt cheap. So, here we go. That's the price. I'm using exact same formula I'm using on S&P 1 minute as I'm using on Euro monthly. And that's where price is heading, end of wave 3. And that's where we're gonna learn if Euro is capable to form 5 waves, if Euro is capable to continue further down. That is absolutely crucial. So here's exact same formula, exact same 5 waves. that remind you only if trend major you get lucky enough to catch the end of wave 3. If the trend is minor, wave 3 never plays out. And here's an example of Apple weekly. That's where Apple had been pushing to the downside from reversal zone 2. Formula remains the same. Extremely crucial formations and extremely powerful reminder. This is not the place where you want to buy Apple. Price becomes extremely unpredictable at reversal zone, giving you two things: either opposite trend correction or opposite trend reversal. The push on Apple had been $15 to the downside, not to be taken for granted. Buyers struggling immensely, extremely important. If price will make it back up to 120, what it will do next. What is price telling me currently? Buyers are still in charge? Buyers are still in charge, but now is not the time to buy Apple. And that's what explains why it is so crucial not to acquire the position at the end of wave 3. As I mentioned earlier, ranging markets occur 80% of the time. Ranging markets are a combination of corrections and very small market formations. You cannot go for exponential targets if markets are stuck in corrections or consolidations or small wave formations. This is a time when trader will be tested for knowledge, and no indicator on the planet will tell you so. So, for example, let's take a look on the dance on S&P. Extremely important to recognize when markets are doing this corrective dance. Here's one of the favorite charts that our students are trading, S&P 15-minute chart. Markets were in complete consolidation here, untradeable. In overnight session, in overnight European session. This is when knowledgeable trader works completely away from computer. Bullish rally picked up the steam as we completely expected. And as I shared with you earlier, reminding you the importance of the levels. So, and that remains the key. One of the most crucial components in your personal trading: when to stay out, when not to acquire the position. It is absolutely essential to recognize that. But as we came to the markets, we also knew extremely well where this bullish rally will end and where it will give us very powerful push to the downside. This was S&P as expected at the market open, not far off from reversal zone. Same rule I apply on Euro, on Apple weekly, I apply to S&P 15-minute. We completely expected the collapse to end here, giving you last opportunity to buy S&P. Trending markets, as one of our amazing students just shared, we updated audio testimony. I highly encourage you to listen to those. Mike just shared how he trades DAX, as DAX is by far his favorite, the latest testimony posted on the website. He's going for drastically bigger targets because DAX is the beast. Oil's got nothing on DAX, as DAX 3.5 times more expensive and drastically more volatile than oil. Trending markets respect Fibonacci levels exact same way as markets that are in consolidation, except giving you drastically more powerful formations. And this is the pattern again. It's all about wave 3. And the key is stay out when market at the end of wave 3. Make sense? And that's a dance that price keeps repeating time and time again. This is not a good place to buy. You're entering into a brick wall. You're acquiring a position at reversal zone. Very, very bad idea. Success rate 20%. Not the success rate you want to trade with. Therefore, we only buy the inception of wave 3, never the end. And here's a picture perfect reminder. That's what happens if you're shorting that late. Not a good idea. Only short from here, not here. So a few more examples, we are done. I look forward to your questions. Here's the Euro's 3-minute chart. Very powerful reminder. Enjoy the inception of the trend. Do not trade wave 2 and enjoy powerful bullish rally to the upside. Bad idea to acquire position at the end of wave 3. Kills me when traders saying, oh, I'm buying a great trend. Right. Here it goes. Reminder, no trend goes on forever. Respect the rules. And here we go. That's the exciting part. And that's why my students love Fibonacci classes on Fridays. Would you like to know when oil spelled out this collapse? As I highlight time and time again. You could see very old posts from social media. I still did not erase. And I constantly teach and show this, and people just get blown away. Seeing it's all the same. So, first time since 2011, oil at reversal zone. It's not over till it's over. As we've been discussing in education course, always and forever. Don't be surprised if you're going to see oil at 42.40 and 27.86 next. But this is precisely the reason why I've been seeing quite a bit of bullish rallies on daily and hourly. Only if you know something more about alpha wave trader method, you would know daily is sitting at the end of the minor trend. Daily chart is showing clearly oil is heading to 43 and then 41. That's the reversal zone. This is the level first time you will be seeing since spelled out by the price since 2011. This is where it's gonna get very, very interesting. Nevertheless, all spelled out by the price since 2011. Short from 106 based on the method I developed. So, if you remove all the indicators from your charts, if you spend years studying the price, if you're as consumed and as driven to solve this puzzle, you may come to similar conclusions. Price is magic. All you have to do is play by the rules. No need to make trading complicated. The key point you have to identify is, what kind of trader are you? Are you a day trader where you will be tested daily? Or are you a position trader where you have drastically larger size account? Or you trading options, placing one trade every few months or every few years, depending on the time frame you trade. But it is exact same formula as I use in day trading room. Rules and price remains the same. If I just remove a word monthly, you will see chart and price is identical. The fact that oil at reversal zone on monthly, the fact that gold at reversal zone on monthly, the fact that S&P at reversal zone on monthly is not to be taken for granted. It happens only every 5 to 8 years. So, S&P only corrections so far, but this is the area where we expect something drastically more powerful. And the last 4 months had been ultimate tests, if you know what the difference is between corrections versus reversal. So monitor oil at very crucial level as shown on daily chart. In day trading room, we respect hourly chart. If you are trading oil today, you witness very sluggish formations. Pay attention to what happened on oil and where buyers stepped in from in overnight session. Buyers stepped in on oil hourly from the end of the minor trend, correct? We came to the markets and we said we ain't buying into this level. We will only short from here. And here is second Fibonacci level. And here is the push to the downside. And here's the levels on hourly. All spelled out since a couple of weeks ago. Oil been pointing down to 40 a while ago. A couple of students started the class, and it's just amazing how price shows you clearly and very powerfully. It ain't over till it's over. Oil is heading to 40.50. That's where excitement will begin, as this is the most crucial level, not just on hourly, but again on monthly and daily chart. Using exact same formula as on Euro 3-minute. So if you're trading oil, you have to respect the fact it's low liquidity instrument. It's drastically more choppy than S&P because it is extremely easily manipulated. If you understand anything about price, it doesn't get any cleaner than this. Google 1-minute chart, stunning, absolutely flawless, magnificent chart. This trader gotten a little bit lucky, buying at the end of wave 3. But the key is to buy at the inception of 1 or inception of 3. Never ever ever trade counter trend 2 and 4. And this is it, traders. This is Alpha Wave Trader method in a nutshell that has 2 key concepts: pure price for entry, 4 key rules, and Fibonacci for exits. No indicators, no software. You can trade method on any platform. From MT4, Thinkorswim, Sierra charts, platforms I've never even heard of, as long as it has price and Fibonacci tool. Fibonacci tool is always free. All you have to do, play by the rules and apply key rules I developed. And this is what Alpha Wave Trader method is. Pure price action is what defines wave formations, wave terminations, and forms Fibonacci price waves, giving you high probability entries with high probability targets and showing areas of inherent danger. In Alpha Wave Trader community, we have 3 trading rooms. The room you will come to open only to the visitors. Education room runs simultaneously for our students daily, where we discuss trade setups, where we start pre-market, where we analyze and do trade recaps, theory classes on Monday, and Fibonacci classes on Friday. Once you finish the course, you have access to Alpha Wave Traders Club, where you have access to daily guided trading and Fibonacci classes on Friday. In day trading room, I demonstrate the method on oil and S&P futures, as they're extremely opposite markets and very complementary. If you choose to join the course, in course you have access to manual and modules 24/7, daily classes, market recaps, Fibonacci reviews, and theory classes Monday and Friday. For private mentoring, please contact me personally. You could see the phone number and email. as I need to make sure that we can work together with our schedules. This is it, traders. In a nutshell, this is all about Alpha Wave Trader method. So please let me know what you are interested in taking a look at, what instrument and what time frame. And I absolutely look forward answering your questions. When you come to the page, all you have to do is click on Learn. Education Course Info is where you find all the information. If you click on this orange thing, this is where you can listen to the students. Michael just posted testimony about oil. And you can actually meet Michael. He's truly incredible. I met with him a couple of times. He lives about an hour away from where I live. You can click About and you can meet fellow students. And this is Michael, our fabulous DEX trader. And this is William, options trader. We just met a couple of weeks ago. And this is me. Okie dokie, gold hourly. Marvelous question, Frank. Let's take a look on gold hourly. Again, if you're interested to look on any other instruments, please post your questions about major stocks, futures, and forex. As I don't have, that's the data I have. I don't have access to small caps, only major stocks. So let's take a look on gold hourly. We have a few more minutes, so please feel free to post questions. Let me know what interests you, and I will gladly let you know what I think. Okay, I have a continuous contract on gold. 1 second. To get hourly data, I need to do something extra. 1 second, please. 1 second. Again, any other questions, please do post. Look forward to answering them. GC. I'm not sure if that's a future EMD. Gold hourly coming up. Gold is still on February contract, correct? Marvelous. Okie dokie, gold hourly. You should have been buying gold. Today your bias on gold was completely bullish. The bearish collapse had started since Friday. So let me show you a few things and what you should have done if you're trading Alpha Wave Trader method. Here's a picture perfect reminder why the end of the minor trend is so crucial. We always have minor trend, we not always have major trend. Make sense? This is a reminder. Gold hourly. The same thing you witnessed today on oil. Gold was never able to blast through this level. Sellers started stepping in with vengeance. Let me show you why your bias today should have been bullish on gold, not bearish. Based on Alpha Wave Trader method, you had opportunity to buy at 1278. So, and let me show you why. Gold was at reversal zone, and that's the magic of the price. Again, what are you seeing to the upside? What is an obstacle? The end of the minor trend. Pretty big problem. Correct? That remains an obstacle. First, next, gold has to blast through this level. Don't buy anywhere near this level. And next, this one. So, had opportunity to buy gold again and again and again. Don't buy anywhere near here. Way too late. Make sense? EMD coming up. EMD coming up. So the same thing I use on gold monthly. Remember where gold monthly is? At reversal zone. Gold monthly gonna give us this magnificent rally. Exact same reason. So let's take a look on EMD. I have to bring up the data. Allow me a minute, please. Future EMD. I honestly think this is second time in 3 years of doing this I was asked to look on EMD. Fascinates me. I wonder what is the volume like on EMD. Absolutely not. Has nothing to do with Elliott wave. I've never studied Elliott wave and I have no intentions to study anything except my method. I have students who come from Elliott wave background and tell me my method is drastically more simple. I see major trend is 5, minor trend is 3. My method is very specific. It is not subjective. Elliott wave, ABC, XYZ. I've never taken a class, but that's what my students are telling me. Why EMD, Alan? Can you please tell me? So the rally on EMD 5-minute chart continues since market open, and this is where it's heading to. And this is where it's been sitting for a while. And this is where it's been sitting for a while. Decision point 2. Reminder, don't ever buy into Fibonacci level. Respect and adore this level. Make sense? Reversal zone 1480. Any other questions, traders? So this is all there is about Alpha Wave Trader method. Yes, of course, absolutely. All of these are Fibonacci levels I developed. These are the levels I teach. And this is all we've been discussing in the webinar. So if you come to the website, you can click on key points about Alpha Wave Trader. On this website, on this page, you can find the summary of everything we discussed in this webinar. If you have any questions, always feel free to email and call me. If you would like to join us in education course, I assure you, you will not regret it. I have fathers bringing their sons and sons bringing their mothers into the course. We're having blessed as price is magic. When you come to the website, if you go to the home page and you click on Listen to our graduates, I encourage all of you to listen to, we started pointing up to what graduates trade. We have an open community. I highly encourage you to listen to Janice. She should be a role model for every single trader on the planet. Why? She never placed a trade in her life when she came to Alpha Wave Trader. She doesn't have any addiction to indicators. She doubled her account. She updates me constantly. She's a beautiful retiree in Florida. Magnificent lady. So, you could see and listen that students trade anything from Dow to stocks to options to Forex. A couple of times a year I teach Fibonacci Trading Bootcamp. I teach additional strategies where we have students coming back from 2-3 years ago, sharing what they're trading. Students trading anything from soybeans to natural gas to bonds to Aussie dollar to things I've never heard in my life. Everything that has the price has alpha wave trader method. And Fibonacci levels confirm daily. Life is just a stage, and you are tested daily. Can you play by the rules? And if you can, you know all the levels far in advance. This is also one of my favorite screenshots. All of this was filmed live. One of the guys in the trading room was in Amazon, and I said, get the heck out of Amazon, pronto. You don't want to be at reversal zone. Adjust your trail very, very close. And here's a reminder. Complete collapse. Not a pretty picture. Remember where S&P is currently, correct? S&P is not doing this. No worries whatsoever. But eventually it will. As rally spelled out since 2009, coming to the end. We're going to see either bearish corrections or bearish reversals. That's why we've been witnessing very, very jittery markets. Make sense? All spelled out by the price and the rules I developed, as I find price very fascinating confirmation. Life is just a stage, and we're witnessing this daily. Any other questions, traders? Key rules I developed is what defines the entries. Price repeating the same pattern time and time again. As long as you can sift through corrections, as long as you can sift through junk, price is very clear and very well defined. Creating exact same dance every single time. You just have to make sure you don't get caught up in corrective junky moves. That's when traders get completely chopped up. Right now, if you're looking on gold 5-minute chart, that's a reminder. No indicator on the planet will tell you when price in correction. Your knowledge will. Every single Fibonacci level is an exit. Absolutely. And that's a reminder. That was bullish trend exit, never an entry. So thank you, traders. Thank you so much for your time. Excellent questions. And please monitor your inbox for invitation. Tomorrow morning, support will be sending an invitation to my day trading room. Any other questions? Feel free to email me or call me. Thank you, Alan. Thank you, Grazina. Thank you so much, Raymond. Thank you, traders. Look forward to seeing you tomorrow. Have a beautiful afternoon. Bye-bye.